This is Tonight. I'm Bruce Whitfield from a slightly soggy Cape Town with the magnificent Lion's Head in the background and one of Cape Town's most expensive roads. The property market in the last couple of months has been quite spectacular, so much so that yes, estate agents are complaining about not having enough stock. Well, at 28 million rand for this house, are you surprised that there aren't too many buyers? Or maybe there are. Let's find out. Samuel Seeff is the chairman of Seeff Properties. He's with us here. He's going to show us around inside, and it is quite nice, I'm told. Samuel, this is all very nice. Are all houses in Camps Bay as nice as this one? This is what, on the market for 28 million or something?
Yeah, 28.5 million. It was bought a few years ago at 21 million. The owner's done some renovations. They've now pushed the price up. Not all is nice, and some are nicer. You know, it depends on the individual taste.
I mean, we're in a road called Medburn Road, which I'm told is one of the best roads in Camps Bay. I thought all roads in Camps Bay were good, but it's about location, location, location. It's about being wind-free, because wind-free in this part of the world must be quite important.
Absolutely. Microclimate in Cape Town specifically is unbelievable. The value that you can have or differentiate between one home and another in one street could be as much as 10 million by being on the wind-free side,
I mean,
or more.
It suggests that people have got money to burn, because if you're worrying about a bit of a breeze and you're prepared to pay 10 million to get out of the breeze, people have got cash to burn.
So it's unfortunately a bit more than a breeze that determines that. But no, I don't think so. I think the properties are select, and I think this comes very much to the supply, demand and scarce resource position. And the top properties in this particular area on the Atlantic Seaboard are particularly rare. They have their value because they offer something that the rest of the market doesn't. It's the wind-free, it's the view, it's the locality, position close to town, proximity. And as a result, people are prepared to pay, and they don't change hands all that often.
You go to the Ouderkraal, which is just down the drag, down that way. There's a fantastic Tinus de Jong painting. It's about that big, of this area, this peninsula, nearly 100 years ago, when there was virtually nothing built along here.
Right.
Is there any land left for development? Is that what's pushing up the prices of existing property?
Absolutely. So there's very little. Almost everything that has been and is available to be developed has been developed. There is that contentious area about Ouderkraal, about what could or can't be developed going forward. But for the rest of it, there are, as we'll see hopefully just now, if the cloud lifts some of the view, some green belts here. Those are public open space. Almost everything that can be built along this coastline has been built, which means if you want to pay to get in, you've essentially got to pay to move people out.
And that's one of the great, I suppose, attributes of this area, because people are paying what per square metre in Clifton and Bantry Bay and Camps Bay. I mean, it's multiples of many thousands.
Yeah, so it can reach as much as 100,000 rand a square metre.
Per square metre?
Per square metre for built property. Then, depending on if it's a freehold home, you would then add on the land, depending on the view position, etc. So yes, and now those numbers sound astronomical until you move into Australian dollars, and you've got to multiply that by 4 times for their prime properties, or you multiply it by 10 times for prime properties in the heart of London.
But okay, so now you're mentioning Australia and you're mentioning London. People see London particularly as an investment destination, get a great rental yield. These are lifestyle properties.
Correct.
And that's possibly the differentiator.
Yes, I think that what we see here is these don't give a return. Most of them are, as you say, lifestyle. They're occupied a month, 2 months, 3 months of the year, sometimes only 10 days. But the person who wants them to be according to their style and their taste and available at a whim. And it might be that they come over for their Christmas holidays, they spend their time here, and that's it. So we don't consider these investment properties in terms of the yield.
But there's a capital return.
Absolutely.
I mean, the capital return here over the, say, post-1994 must have been extraordinary. I don't know if this house existed, but had it existed in 1994, it would have sold at a fraction of the 28 million that it's on the market for now.
Probably somewhere in the region of 10%. So you've had significant growth over the period. In fact, in 2005 and 2006, we had the highest growth in the world in terms of capital growth. It was 36%, and in the following year on that, 24% respectively.
On this Atlantic Seaboard bit?
Right throughout South Africa as a generalization.
How has this Atlantic Seaboard portion, though, outperformed the country? Because it has, significantly in recent decades.
Significantly. And again, it comes to that scarce resource. So what you have is the sea on the one side, a mountain on the other, a reserve that has been imposed by which you can't build, and there's so much that one can do. And obviously this is the area for lifestyle, beaches, views, where everybody wants to live. So you have everybody saying, right, this is the opportunity, let me live there until they come to the price tag. So, and then it's for the few.
Everybody is a relative term. Everybody with 27 million rand to spend.
Well, that's exactly it. I think what we have is massive amount of demand until we find we look at the price. And then there's always the concern, well, it's only the foreigners who are buying because they're the only ones who can afford.
Is that a myth or is that a reality?
It's a complete myth. In fact, most of the upper end price sales, and I'm talking upper end in this belt at 20 million rand plus, are to South Africans. So there's the perception that South Africans can't afford it. Well, that's not true. That's the first. There's the second perception that all the properties are the prestige, elite properties are being bought out by the foreigners who are not here. That's not true. In truth, in total around the country, we're talking less than 5% are bought by foreigners. In this particular belt, that percentage would be higher.
Higher, like as in 20%?
It could be as high as 20%, correct, yes. But for the rest, they're South Africans. Equally interesting amongst the fact is that if you look at Clifton specifically, and it's always good to look at Clifton in mid-June, July, and look how many lights there are on in the buildings, and then look at it again in
December,
in December and Christmas, New Year, and it's vast. There's like Eskom has told everybody to switch the lights off in June, July. But the truth is those are mostly owned by Johannesburg families who come down and spend a month here, and then they lock them up.
It's an extraordinary dynamic that drives the valuations here, because the perception is that it's foreigners pushing property prices out of the reach of ordinary South Africans. Your contention is that the market is actually being made by South Africans. There's no foreign underpin, a dollar or a pound underpin?
Interestingly enough, and it sounds crazy, but I will say it, up to 100 million, it's locals mostly. If you start looking, and we've just had one or two transactions which are going to go above 100 million, those are probably going to be your foreigners. But if you're looking at the highest price we've done here in Clifton, just around the corner recently, was 55 million rand, South African buyer. In fact, ex-South African, went overseas, made his money, came back, lived. He's now invested. In Bantry Bay next door, we've just sold an apartment for 42 million, also to South African. Now, we sold a piece of land for development in Clifton for 70 million. Just recently, but that was to a foreigner.
A piece of land?
A piece of land.
How many square meters?
Well, it had two houses which will be knocked down, and they're going to
But people have also got to be able to build at 50 degrees. I mean, what it costs to build one of these properties, and the pilings and all of the construction that goes into it, and it's extraordinary expense. But people are doing it. That's where the money is coming from, primarily local money. In the first quarter of this year, you do a quarterly magazine talking about property markets. You said, where are all the buyers coming from? And any estate agent I talk to says, oh, we don't have stock. That seems to be a perennial problem, but there does seem to be a stock drought, a particular stock drought going on at the moment.
Yes, I think it's partly seasonality. So as Cape Townians, we've learned along this side of the mountain that most of the potential buyers will come down in the summer months. So a lot of the stock that generally comes on, if it's either sold before the winter, it's slower over the winter season. I think that what we're facing now, and this is an interesting conundrum because it's been my contention for a while, that the transaction costs for South Africans are quite steep. When you look at it, you've got to pay
nearly 10% of the purchase price in transfer duties and lawyers' fees and
so
moving
it comes
fees and all of that sort
correct.
of stuff.
You pay commission, you've got to pay your transfer duty, you've got to pay capital gains tax on the property you've sold, then you've got the legal fees, etc. It's probably closer to 15 to 17%, and that's quite a sizable transaction fee when you look at it as a whole. So what's happening now is, and if you can look around, there are a lot of cranes, a lot of people are fixing up their old homes and choosing not to move, less stock on the market. Again, a driver of prices.
So people are holding on rather than scaling up and moving. There are some remarkable properties. Some are 50, 60, 70 years old along this belt. There is one particular property, I'm not sure if it's on your books or not, the Enigma Mansion.
Yes, yeah.
It's on the market for 300 million rand or thereabouts. I'm guessing there hasn't been that much interest. I mean, lots of ogling of fantastic portraiture, I'm told, inside.
Very interesting style, yes.
But not too many buyers.
Yeah, there was a contention from the owner, we haven't seen it, that he was presented with an offer very early on in the marketing, and as often happens, your best offer comes first, which he chose not to accept. Following that, I think it's been slower. You know, at that kind of price tag, you can get a lot of people looking, but the real interest isn't there. So, you know, when I first heard about it, I said, well, that's crazy. Nobody's going to pay that amount of money. That's ridiculous. But when you actually go on site, there's quite a sizable piece of land. It's 4 plots. It's a big consolidation. It's a massive amount of money has been spent. Now, it can be to your taste or not.
If you have your back toward the house, the views must be spectacular because of the house itself.
So the views are great. The house itself, it can be your choice and your taste or not. But interestingly enough, it would get and fetch a lot more than I initially expected, but nowhere near, I don't believe, the price that's asking.
What are the dynamics in this market over the next couple of years? Because we look at the huge capital growth that we've seen in this area, particularly this belt. I mean, even Londonder's done very well, and that's out of town. If you forget the milk on the way home, you've got a problem. If you live in London. But do we see similar growth patterns over the next 20 years as we've seen in the last 20? Is it feasible?
Absolutely. I think this is an area that takes a breather. I don't think it reverses, and even over the poor market that we had, 2008 to 2013, where there was little demand, prices did come down, but not significantly. So they held. They held their own. Where seller was forced to sell financially, they took offers, but the market as a whole discounted that. It's a very optimistic market. Somebody gets a good price, everybody's selling. Somebody gets a poor price under financial pressure, well, he had to sell, I don't need to sell, so we stay as we are. So if you look at it projected over the next 20 years, I think it'll hold its value and grow, because what we're finding is that we still have to be identified and experienced by a great deal of the world. So does that one say that, well, foreigners are going to come and buy everything? They're not, but I think there is going to be an increase.
We have quite a lot of government reluctance, though, about foreigners coming to buy properties.
I know, and I have to say personally that I think it's strange. I do understand government land, if they wish to say government land won't be sold to foreigners, I have no problem with that, it's government land. But privately held land should be able to be moved and sold as the owner fits. And the one thing that I do want to point out in that particular argument is that the foreigners who've come into South Africa have added value, whether it's to the homes here, they've rebuilt, they've added, they've employed, they've invested money here, they've brought their friends here, they've contributed to the economy. But particularly, for example, if you look at the wine farms, arguably you could say the best wine farms, the best redeveloped, the best worker conditions are those from foreigners who've come in and said, right, this is how you run a farm, this is how you involve your employees, this is how you build everybody up and they all share, and that's how you have it done. Great examples. I don't know why you'd want to cut that off.
Samuel Seeff, you've got the sale forms here. Fill them in on the way out. Only 28 million. It's a steal, according to him. Is he paying the deposit? I don't think so. Samuel Seeff is the chairman of Seeff Properties, joining us on Tonight with Bruce Whitfield. Thank you for watching. There'll be more tonight tomorrow. Till then, bye-bye.